Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting on 10th of March until the 15th of March. Quick reminder, on Monday I will be publishing the weekly forecast PDF format. So just come back to the video and below in the description you would find the link to the PDF. If you are new to the channel, I invite you to subscribe. Just don't forget to click the ring button so you get notified every single time a new video is available for you in the channel. Let's begin. Previous week was very interesting. The way we are working, we are going through the previous weekly forecast, which is here, to check what works for us, what failed, what is still relevant, what has to be updated, and so on, and prepare our weekly plan. But before, a quick view on the fundamental view. We are after the non-farm payrolls, and we saw a very surprising and disappointing number. 20k only new jobs were added. The unemployment rate dropped down, which is good. The average hourly earnings grow up, which is good. So the numbers are a bit mixed, but that's definitely a disappointing number. And for this week, we do need to pay attention to the dropping number CPI in China. Besides that, what's important to pay attention to this week? Speeches from the Chairman Powell. Retail sales and core retail sales in the US, which are expected to become way more positive than it used to be before. GDP from Britain, and the CPI and core CPI in the US. And maybe the main important thing is the Parliament Brexit vote that should happen this Tuesday. Besides that, PPI and core durable orders in the US, annual budget in UK, and that's basically the main factors. We also have the press conference and the monetary policy statements in Japan. Recently they been less changing things, so of course should be paid attention to, but the way it looks as for now, there are more important factors. So let's begin. We were after the pound dollar for the long term. My expectations were and remain bullish. That was our plan, to get the retrace and look for buy opportunities. I wanted to see the retrace happening in two waves, providing a buy opportunity. So here what happens with the pound dollar. We got the pull back to the Fibonacci of 38.2, which is a classical target after double cycle. So theoretically everything is ready for continuation. With the Brexit vote, very important to be careful. The only problem that bothers me at this stage as for now is the fact that this is one straight move, and this is one straight move for the reason that there are no real corrections after first drop. So basically what we are looking at is a move, corrective movement, which normally happens in two waves or a ranging pattern such as wedge, channels or triangles, and then continuation. And in that case this is kind of a straight movement, which is a bit suspicious. I'm still after buys. I would definitely be happy to look for something like that, or alternatively for the pound dollar to start create triple high, retrace, and then new buys. Definitely be great opportunity, triple high, triple low, which would give us the definition by pure price action, by a clear definition of the trending conditions. So yes, I am still long, but this retrace down is suspicious, and what could happen here is that after the two waves that we had on the weekly cycle and the fake breakout that we had on the bottom, we might be facing another false breakout on the top. And that's how many times ranging conditions begin. So there is a chance, depends on of course many fundamental factors, and that's why the current conditions are so undecisive, and what might happen here is a drop to the bottom of the channel again before we are facing new rallies opportunities. So be very careful here and look for the trend to change. Look for these highs to create themselves, few higher highs, few higher lows, or false breakouts and higher highs after the corrections, and then you get yourself beautiful bullish evidence. The next one was the euro pound. We wanted to see two waves and a sell continuation. We got these two waves right here. We got a sell continuation. After that, the pair though refused to create a new low. So we blocked here by double bottom and a bullish divergence. Now here comes the thing. Does that change anything for the long term? From my point of view, no, because I was going to say "нет" in Russian. So no, that's my personal point of view, because the target after the triple cycle still remain much lower, and I would still expect the two waves to continue. However, the daily chart is facing a classical Fibonacci bounce from 61.8, double attempt to create a low, right? That was the first, and that was rally, and the second attempt to go through, which failed. And basically we were trading this short this week, and it worked for short term, but now after Friday we got a reversal, and this is, pay attention, what we call here, where is that? Here. This is a beautiful engulfing pattern. Pretty serious, as it also breaks through the previous high and the high of the red candle. We do need to pay attention to that. There is a good chance we are going to face a corrective cycle right now. So definitely possible scenarios that we would be going to 38.2 of that cycle Fibonacci. And for longer term, the plan would remain sell after corrections. Okay, but very good chance that as long as this low holds, which would be the invalidation, we would be facing or two waves and then correction or a ranging conditions before the next sell. So on the short term, the euro pound might be dancing within the doors of the corrective cycle and provide some short-term buy opportunities. Next one, CAD franc, our plan, looking for buy dips. So we wanted to see the bullish divergence forming after the double wave. Let's check around what we are facing here. So we got a drop, no bullish. Let's check deeper. Yeah, bullish hidden divergence. I didn't see that on Friday. Bullish hidden divergence forming now on the daily chart, and the 4-hour chart gave us exactly what we wanted to see, right? The two waves, the bullish divergence. So we got a trend line breakout right now. Basically, if we manage to go and start to create higher highs, we can of course start looking for the buys. So the pair is ready, and yeah, by going above we should be looking for buy retraces, and if the pair decides to create one more low, then what we would be wanting to see is another false breakout, another divergence low, and then go for the attack. So we need to see which of the ways the pair leads us, but we do have our conditions we wanted to see ready to start looking for the next buy setup. Aussie dollar, we wanted to see a new low, bullish divergence. We got a new low, right, and a bullish divergence. So now the only thing is missing, that's a bullish trend change. We don't have currently any false breakout or higher highs on the Aussie dollar, so we are going back to the daily chart, and this is what we still face. This is our trend line. Once we get the break above, we are ready for buys. Alternatively, we should be facing here some slowdown and false breakouts, right? So that's definitely a possible scenario, and then we have a high here or a high here to be broken, right, and to provide us, so let's assume this would become a false breakout, then higher highs, and then the retrace. And the alternative, of course, as always, triple high based on the price action will be reference for a possible beginning of the next bullish trend, and then buy retraces. So the Aussie dollar provided us what we wanted to see, a new low. Now we do need to see that turning into bullish conditions and bullish change, bullish turnaround after false breaks and higher highs, or triple highs, triple lows going to the upside, and then buy retraces. The next one, pound versus the Kiwi. The plan was buy retraces for this pair, but there is a little but here. They retraced once again, straight movement. So we got here during the week these two waves and a bullish conditions with this breakout, but this breakout failed, and after that we got a straight move down without providing any new opportunity. So at this stage, as for now, I put the pound versus the Kiwi on the neutral side. I do want to see how it develops. At this stage, not enough conditions to look for the next buys, meaning moving that to neutral. The short-term opportunity we got during the week here didn't hold. Now, no need to force. We are waiting for the next opportunity. If it fails, the market basically tells us the conditions are not perfect for the further bullish run as expected. Now, need to wait for the next setup. So pound Kiwi is moving to neutral. Euro Aussie, our goal was to look for sell the rallies. We wanted to see a drop and a new high. Here we got it exactly as we wanted. New drop, a high, a divergence, and a move down begins. So far, looks good. By ideal, I would want to see this area cleaning. There are a lot of stop losses located here. Almost cleaned that. So what we did see is the clearance of this high, right? Also, a lot of stop losses were located here. We got a fake breakout. Now we got a trendline breakout and lower lows. So basically, we have the conditions. As long as this top holds, the plan is bearish. Exactly as it was on the previous week. We do need to see at the beginning of the week how the CPI from China will affect on the Aussie. That might make it more sensitive and even change things. But at this stage, the pressure remains bearish as long as this top holds and respects. The euro dollar, we were bearish on this pair. Now I wanted to see that crossing through the Fibonacci retraces to become really bearish, and here we go. We crossed through the Fibonacci retraces, we got the correction, and boom. Euro dollar turned to be one of the best trades we experienced this week. It went exactly by the plan and turned to be a sugar trade, paying a lot. So what's next? The bearish pressure still remains on. However, the level begin critical. To be critical, 111, 110 zone is very, very, very critical. This is a fighting area. A lot of stop losses are located here. They are being kicking one after another for the buy for those who buy early. And to the based on the daily chart, we still don't have enough evidences for buys. We don't have any higher highs, so the pressure is still bearish for the euro dollar, and I would not be surprised if we would see wrong button here. I would not be surprised if we would still see the euro dollar continuing lower. Our invalidation would be, of course, this top, because if it breaks through this top, that makes higher highs and then possible bullish scenario. So as long as the top holds, the pressure is bearish, and I would not be surprised if we see attempt to continue and make the lows. Pound versus the yen, I was looking to get one more push and go for sells, but this push never happened. Here, that's what I was looking for. Drop, push, clearing here and dropping down. Unfortunately, never provided this opportunity. The market never provided this opportunity, so the bearish movement started. Based on this double cycle, there is a very good chance the pound yen is aiming towards 38.2. So I think we should be heading towards the bottom here. Now, no real signs against, so sell the rallies is a plan for pound yen. I would say, as long as this top holds, sell the rallies on the short term would definitely be acceptable scenario. Euro yen was pretty much the same plan, to get the move down and a new high, but again this never happened. We never got a new high, and instead of that, the trend line that we were looking to hold was broken massively and became a bearish plan, a bearish sell, right? So we were, after creating new high, as long as the trend line holds, didn't work out. This idea failed, and if this trend line is not holding, we become bearish. This idea pays. And what's expecting next? If the problem with this double cycle from daily chart is we didn't have real level, that makes it a bit less attractive. We are around 38.2. Kind of not really clear to me. I would still be looking for sells on the euro yen short term, more aggressive because it didn't create a new high to the level wanted, but I would be looking for a possible sell-off continuation for this week. Gold and silver, they both making so far what we wanted. A bottom established, now a correction. Let's take a look here. Bottom established, now the correction, and the idea is the same. After this top, a sell, or we are moving in a range for a while. So no real change for the gold, and same with the silver. Exactly, no real change. We wanted to see this establishing a bottom and then a rally or a range, and that's exactly what we see here, establishing a bottom. So we neither go for two waves here, correction, or we move inside a range for the coming period. So that's pretty much what we are facing with the commodities. Dollar index, we wanted to see a new high forming. Let's take a look what happens here. Didn't check it yet, to be honest. Daily chart. Yep, so we got the new high we wanted. Now we are after sells. Pay attention, we do not yet have divergence. MACD never ticked down. We never got a trendline breakout yet, so be very careful here. And the weekly chart also still no divergence. So yes, I do expect this zone to be critical, and we should be facing here sell opportunities. So what I would like to see from that moment is basically some kind of a false breakout and a trend continuation down, or alternatively trendline breakout and sell off. That's the plan for the coming week for the dollar index. Now before I move to the where is that? Here, the Dax and the Nasdaq, I would like to go over two new interesting opportunities on the list. The first one is the Kiwi versus the CAD. Now, I just want to go quickly over the longer picture. For long term, I am still very bearish here. We are in this ranging corrective cycle. That's what I would expect. Now, on the weekly chart, it seems like the pair is trying now to form triple double. So there are two variations here. The first variation is we are creating this top. The second one is that this top is being as a range here and then continuation lower. So for that we require to go to the daily chart, and here is what we are facing. That might turn to be the triple double scenario, and if it does hold that and break through the chart, then we might be experiencing the next rally to be complete. Alternatively, if that turns to be another fake breakout, then we want to see the trend line breaking and sell the rallies. So keep an eye on that Kiwi versus the CAD. It starts to be an potentially interesting opportunity. And the, let me check where is my list. Oh no, actually that's covered. Yes, that's the only addition to this week as for now. And then we have the DAX and the Nasdaq. So we wanted to see the DAX breaking below this low to start talking about our next possible portion sells. We got, as you can see here, very close, still no breakout. So we do want that to complete, and then we can talk about sell the rallies. Okay, we got a trendline breakout, we almost got the low, we do still want that to complete, then it will become like a triple, oops, sorry for the ugly drawing, for a triple cycle down, and then we can talk about sell the rallies. Okay, so eyes on this scenario to happen. And the Nasdaq, which we also, or we don't have it in, so okay, so now it's time to talk about that. I was sure we have it in the review, we don't. This is the case which we got. So let's start from beginning in that situation. We are here talking about the convergence from the weekly chart, possible head and shoulder scenario. We are now with a bearish hidden divergence and a beautiful engulfing, which is also a kicker structure. Daily chart formed and completed a bearish cycle, a bullish cycle, apologize, with bearish divergence. We got the clearance of this high, okay, and the 4-hour chart completed for us the turnaround. We got a false break here, we got a false break here, we got the lower lows. Now I would expect that to make some correction and look for sells opportunities. That would be at this stage our invalidation. We might see some fake breakout here. Okay, if it's a false breakout, it's another sell opportunity to watch, the alternative for the sell opportunity to watch. So that's that becomes also very interesting setup for this week. Now it's pretty much the same on Dow Jones, it's pretty much the same on S&P. We don't want overexposure, so choose the one that you can get more and provide you better risk reward. So that's pretty much all for today. If you enjoy my work, please show your support back. Leave some feedback below in the comment section. Let me know what you think of these opportunities. If you have any other pair that you want me to cover, just let me know. I cover the ones that are most interesting from my point of view for the beginning of the week. During the week, there are many more interesting opportunities pop up, and we talk about them in the live trading group on daily basis. So if you are not yet with us, I invite you to join the Traders Academy Club and to enjoy the live trading rooms day after day, talking about the most interesting opportunities as they develop. To do so, just go below in the description and you would find the link to join. That's all for this video. Thank you very much for watching. I wish you a wonderful trading week, and I'll see you soon. Bye for now. Vladimir Ribakov, Traders Academy Club.